A good morning to everyone. I would like to welcome you to this, our second of a series of webinars that will run through the year 2021. The first webinar that we held was hosted by my colleague Martha, and her and a panel of experts discussed the role of digitization, connectivity and e-commerce in the transformation of the SMEs market in our industry. If you missed that, you can click on the link below and you will be able to watch that. I encourage all our viewers to subscribe to the Airtel YouTube channel so as not to miss any future webinars, exciting discussions and events at Airtel Uganda. My name is Andrew Rugamba and I will be your host for today as we discuss the topic transforming lives through digital microfinance, savings and loans. I please request you to invite your friends and families so we may learn and grow together. So in no particular order, allow me to introduce our panel experts who will help us to unpack this topic as we move along. So number one, I would like to introduce Dr. Fred Muhumza. Dr. Fred is a PhD holder in development economics. He holds a master's in economic policy and planning and a certificate in development evaluation from the World Bank. Dr. Muhumza has over 25 years in development, policy research and analytics experience, and has taught in various institutes of higher learning like Makerere University and Chambogo University. He currently provides technical advice to the government of Uganda, the Office of the President, and relevant ministries. He has worked as a research fellow and specialist in organizations like the Economic Policy Research Center, KPMG Uganda, and Financial Sector Deepening Uganda. He also has served on various boards, including the Bank of Baroda, Uganda Christian University, the African Forum and Network on Debt and Development, and many, many others. You're most welcome, Dr. Muhumza. So allow me then to introduce Mr. Joseph Sanjula Lutwama. Mr. Lutwama has over 20 years experience in undertaking research and consultancy, focused mainly on economics, business, and financial sector deepening. He's a financial markets and business strategy expert with a strong background in economics and research. And he's currently the Director of Programs at Financial Sector Deepening Uganda. He has previously served as the Director of Research and Market Development at the Uganda Capital Markets Authority. Mr. Joseph is a holder of a Bachelor's in Economics and a Master's in Economics and Planning. You're most welcome, Joseph Lutwama.
It's a pleasure to be...
Without further ado, please.
No, it's a pleasure to be here this morning or this afternoon to deliberate on issues related to finance.
Thank you, Joseph. It's a pleasure to have you. So next I will introduce Mr. Edgar Biama, who has over 18 years experience in the banking industry. It is safe to say that Mr. Biama is a seasoned banker and is currently the Managing Director of KCB Bank, Uganda. Prior to his appointment as the Managing Director at KCB, Mr. Biama worked in various executive positions. He was the Executive Director of KCB, and he served in key leadership roles in KCB Bank, in EcoBank, where he served as the Head of Treasury, and also as the Head of Liabilities at Global Markets Unit at Stanbic Bank, Uganda. He's a seasoned auditor, having served as an audit senior at Ernst & Young as well. Edgar has received leadership training from Harvard University in the Senior Executive Program for Africa, and is a fellow of the Association of Chartered Certified Accountants. Edgar is also a holder of a bachelor's degree in statistics from Makerere. You are most welcome, Mr. Edgar Byama. Okay, so our final... It's always a pleasure, Mr. Byama. So our final panelist is Mr. Amit Kapoor. Mr. Amit Kapoor has over 22 years experience in strategic management and growth of commercial entities like PepsiCo in India. He's worked in Coca-Cola in India. He's worked in Vodafone in India, where he was a strategic business lead. And Mr. Kapoor has also been instrumental in leading innovation at Airtel Uganda, where he currently serves as the Chief Commercial Officer. He and his team have largely been responsible for great innovations at Airtel Uganda that have given birth to products like Quick Loans, the Airtel MasterCard, and the key products that are in focus for today's discussion, which is the Quick Saver product and the Airtel Agent Financing. Mr. Kapoor is a graduate of a postgraduate diploma in management from the India Institute of Management, and also holds a Bachelor's of Science in Physics from the University of Delhi. You are most welcome, Mr. Amit Kapoor.
Thank you, Andrew, and really happy to be here.
It's a pleasure to have you, sir. So before I begin, I would like to recognize the presence of our esteemed audience. We thank you for logging in. Members of the media, our colleagues at Airtel, KCB, and the various other institutions. We thank you for sparing the time to be with us today, and we hope that you will enjoy and greatly learn from the deliberations. I request that any questions that may arise as we go along are typed in the chat section, and we shall address these right after the panel discussions. We will attempt to address all questions, so if you can leave an email address as well, we will respond to questions that we may not cover in the time that we have. We expect to spend at least 1 hour on the discussion, and pray that it will be as fruitful and exciting as it has planned to be. So without further ado, I will dive straight into our panelists, and I'll direct my first question to Mr. Joseph Lutwama. So Mr. Joseph, I am confident that you have carried out quite a wealth of studies in this area. And given that, I would like to know, how would you describe the state of personal savings in Uganda and the role played by savings in personal and national development? Joseph? Joseph, could you unmute?
Yeah, allow me to share a slide that sort of gives you a snapshot of the, it sort of gives you a snapshot of the I hope you can see that slide.
Yes, Joseph, we can see this.
Yes, now from this slide, you can actually see that in Uganda, the major form of saving is actually informal. It's interesting, but that's a fact. Most people trust family and friends, and most people trust their informal groups. Whether they are in urban areas or whether they are in rural areas, whether they are poor or whether they are rich, they tend to trust a lot their informal groups. Informal groups here, I mean anything from a VSLA to an investment club in urban areas. But you can actually see that as we move up the wealth quartile, right at the top, it looks like a lot more of the wealthiest are beginning to adopt the mobile phone. And also you can actually see that mobile money is used a lot more by the wealthiest. Talking about savings, while a number of Ugandans do save, but actually the amount of savings is not really that much. You can actually see that the median amount of savings is just 4,800 Uganda shillings, which is just under $2. Of course, if you take the typical average, it's much more, because then it is skewed by the huge savings from the richest. But you can actually see, even when you take a simple average, the overall savings in a year is just under $1 million. And most Ugandans save in liquid assets. They do save in liquid assets and also in a savings groups. Very few Ugandans do actually go to the bank or any formal. So that is the state of savings. Not many of us do save, but do save informally, but also the amount of our saving is not much. And I'll leave the doctor to explain some of the drivers to savings. Now, savings are very critical to the development of the nation. They are very critical in the journey of each one of us attaining assets and wealth. For you to be able to attain an asset, for a country to be able to grow and develop, it starts with savings, because it's investment that actually results into whatever assets you have, whether it's a house or it's a business. But for you to be able to invest, you need to first have saved. So it all begins with savings. No wonder we don't have a lot of investments in Uganda, because we don't save a lot. Because it all begins with savings. You put aside money, and then once that money accumulates to a level where you can be able then to invest it. And even when you're going to get credit, you need to leverage your savings. A bank will not give you money unless they're sure that you have sufficient cash flows for you to be able to service the debt. You can actually see then that whichever way you look at it, whether you're going to borrow money or whether you're going to accumulate your savings and then invest, it all begins with savings. And that's why savings is a very critical driver of not only the growth and development of the country, but also each one of us achieving our aspirations in life, whether it's a house, whether it's a car, whether it's running a business, whether it's going to school, it all begins with savings.
Thank you very much, Joseph. And I would like to address myself to Dr. Muhumuza next. And I would like you, Doctor, to describe the savings culture in Uganda based on your observation and research. And if you think this culture can be transformed, and what do you think the impact of digital savings would be to this culture? Digital saving products like Airtel's Super Saver.
And thank you, Joseph, for that kind of statistics, which is quite instructive. I think, first of all, from the economic angle, anybody who earns their money first puts away their consumption before they think of savings. So sometimes what we call a culture is a reality to most of the people we're talking about, that in the first place, their incomes are so low. And looking at the statistics by the Bureau of Statistics in Uganda, about 40 to 50% of household income literally goes into food. The remaining 40% will be distributed between housing, education, health, communication, and transport. So depending on how much this household earn, you may find on a daily basis they are literally left with 1,000 shillings or possibly 2,000 shillings to save. Now, that has been very difficult to find where to save your 1,000 shillings or 2,000 shillings. And from the angle of us as elites, we have imagined that people have no savings culture. But actually what was missing is what we are glad that the technology is now addressing. That today somebody can actually save their 1,000, they can save their 2,000 easily on their mobile money platform or whichever other means that they have. So what we thought was a culture was actually a reality to these people. And I want to believe it was partly related with the very low incomes that people had. And secondly, it was related with the lack of ability to save the small monies, the micro savings really, because the minimum balance in a formal financial institution was already somebody's monthly income or weekly income, which was a challenge. As you've said, the technology that is coming up, we should see it change that culture. And I've seen quite a lot of people keeping balances on their mobile money platforms. We don't know whether these are in transit or not. We need to do some deeper analysis to see how long these monies stay in somebody's wallet, because that is what will determine whether this person is saving or is actually keeping it there as a precaution to spend within a day or two. But at least it is good evidence that when COVID, for example, struck and the president locked down the economy in March last year, we were able to see savings on mobile money platforms, the money that was being left there, shoot up from 600 billion per month to 800 billion a month. Meaning really, the technology is helping to address this cultural concern of the individuals. And we are looking forward that what we thought was a culture was actually a technological and service impediment that is gladly being addressed by the oncoming on board of the technology. But also we know that people do save for a rainy day, money that we call in transit, which they draw down quite often because they live on the margins. They are not like many of us who will visit your bank or check on your big balances once in a month. For them, they literally check on their balances quite more often because they might be saving for that rainy day, and the rain comes every week, twice or thrice. So we should not be judging them by their savings on how much they have left on the system for a month. I think their savings and drawings of those savings are quite more intermittent compared to those who are larger income holders. They might save on Monday and draw that saving on Wednesday. Now, in our conventional treatment, we may think that wasn't a saving. But actually to them, it was a saving and they expected to use it within a day or two or possibly 3 days. So if we get into the discussions of conventions, we will discover that the culture, what we thought was a culture, was possibly a reality to them, and it is changing going by the technology that we are able to see. Thank you at this point.
Okay. Thank you very much, Doctor. It is nice to know that your submission collaborates with Joseph's submission, that the amounts available for saving are quite low, and that people, after their household expenditures, the amount available to save is very little, mainly due to the fact that the incomes are low. So my question then would go to Mr. Edgar Biama. Given this information, given that the available amount to save is very low, and as submitted by Dr. Muhumuza, the minimum balances required by the formal saving institutions are quite high. What are financial institutions doing to diversify savings in the country. Coupled with that, savers would like to see more competitive returns on the small amounts that they are saving. What are the banks doing in order to meet this need?
Thank you, Andrew, and good morning, viewers and listeners once again. I think the doctor made a very interesting observation, both relating to the financial institutions and what we call savings culture. But what I take away from him is it's actually a savings pattern. I think the banks, in many aspects, have been adjusting to the reality. First and foremost, to increase their reach. If we looked at Joseph's initial slide, one of the key, I think, paradigm shifts now in the banking sector is to target financial inclusion, to look at how many of the informal sector we can bring on board. Now, one of the biggest solutions to that has been to leverage the technological aspect to it. That one makes it much cheaper, eliminates some of the earlier obstacles that you are looking at, like what Dr. alluded to, minimum balance, which was a key impediment to many of these informal savings. And also then allows the banks to start growing the return they provide. I will start with, in terms of diversifying savings. I think over time, in the last couple of years, you've seen partnerships across many financial sector players, be it in insurance companies, be it fund managers, and now together with the telcos or mobile national operators to kind of provide different product offerings to a cross section of our population. This has to really try to understand, is speaking to the kind of patterns that we see. If I might use something like the Airtel Saver, one of the biggest Airtel Super Saver, one of the biggest challenges is what the doctor was alluding to, the saving for a rainy day. Save today, tomorrow you're withdrawing. That meant that the kind of return you got was very low. In many times it was less than 1%. The Super Saver is now saying no, it is 5%, and you can withdraw when you feel like. However, what does that mean? This has been a result of a lot of things. A fairly stable currency, fairly stable regulation, and also the banks now realize that as they grow the pool of savings, continuous and intermittent savings do not necessarily take away the amount they can provide in a return. So you will continue to see a lot of blended products. These blended products, which will speak to again what the doctor was alluding to, whether it is insurance, whether it is education, whether it is health, will be embedded in the savings offering. And therefore, they provide both a financial return, but also what I would call a material return in a certain aspect. But then will also gradually drive, because of their micro nature, 500 shillings as a minimum, will gradually drive a growth in investments. The key challenge therefore will be that if I can offer 5% on 500 shillings and you can withdraw whenever you feel like, what does that mean for the bank? It means it has to grow the pool. It also means that it will slowly then also start supporting the central bank in the transmission of monetary policy. The return on the Airtel Super Saver is 1.5 percentage points below the CBR, which is a very good return in my view. And therefore, for the banks, the key issue will be to leverage technology to lower operating costs, increase our reach and drive convenience, and therefore guarantee a return, but also gradually drive the pool of investable funds. This is the duration challenge. On top of very low savings, I think we have also very short-term deposits, which also again constrains the creation of, which also constrains the kind of alternative investments the banks can make, and also helps to keep the cost of credit fairly high. So, Andrew, those are my 2 cents on the issue of return and yields at the moment. But I think over time we have seen a gradual rise in the returns that banks are providing, and the banks will continue to innovate in terms of product offering that they will avail to their customers and the broader market. Thank you.
Thank you for that comprehensive submission, Edgar. So, in a nutshell, the banks are going to leverage more on partnerships to drive innovation in this space, if I got you correct. So, Joseph submitted that more savings are happening in the informal sector or using informal methods. He also highlighted the increasing use of mobile phones in savings, and also that the amounts that are being saved, or the tickets, are much smaller in these informal methods. So I would like to ask Mr. Amit Kapoor, I haven't forgotten you, sir. Speaking specifically to Super Saver, how will Airtel, with this digital innovation, promote savings in Uganda? And what are the benefits of Super Saver, or the opportunities that one needs to look out for in the market?
Thank you, Andrew. And I think some very relevant points have been made by my fellow panelists so far. And as everyone has emphasized, because savings is a very inherent need. It is a requirement to slowly build yourself to fulfill your aspirations. Be that maybe for paying for your child's education, or it may be for buying a boda. However, what we call that we do not have a savings culture in Uganda right now is driven by two things. One, sometimes the low income and therefore the low ticket sizes. And more importantly, by a lack of access to formal financial products. You see, Airtel Money, to a very large segment of our population today, is the first experience of a digital or a non-cash ecosystem. But when it comes to savings per se, on a product which is easy to use, easy to understand, and for people to be able to earn interest, a formal product sometimes does not exist. So as you try to expand the savings culture, as you're trying to reach to the bottom of the pyramid, as you're trying to reach those segments of the population which have been untouched by a formal product, it is very important that you design a product with their needs and their requirements in mind. So anything that you do for that segment, considering it may be the first time that they are actually interacting with a formal financial product, not only does your product needs to be very safe, very secure, it is also something that needs to be very easy to understand, extremely easy to use, and very convenient, and something which is available at your doorstep. And that is where I think we brought this product called Super Saver. So if you look at this product, we have merged, or we have brought together the reach, the safety, the security, and the absolutely, I will again emphasize, unparalleled reach of Airtel Money. And we have combined it with the banking expertise of one of the most reputable banks and one of the soundest banks in Uganda, which is KCB, to bring together the bank at a doorstep of an ordinary Ugandan today. So now you can, with a few clicks on your phone or on the app, either on USSD when you go to *185 or on the Airtel app, you can, with a very few clicks, you can actually, from the comfort of your home, from the comfort of your office, from the comfort of your employment, or even outside while just relaxing with your kids, you can start savings for your future from as low as 500 shilling. And not only that, you earn a phenomenal interest rates of 5%. And when we and KCB were talking about this product, we were very cognizant of the fact that while we are going to the bottom end of the pyramid, we need to ensure that they're treated like the best. And that is one reason why we said they need to get interest rates which are in line with much larger deposits that people normally attract with. And therefore, we build up this interest rates. Second, as Dr. Fred pointed out earlier, that some of these people will be putting the money and then they withdraw it because that is the requirement of that particular segment. We've ensured that you earn an interest rate on your daily balance. So if you withdraw at the end of 2 days, 3 days, you're not really penalized for that. Rather, you still earn for the number of days that you saved this money for. And what that does is that we think that such products, such scale, such reliability, and such safety with such phenomenal returns is something that will go a long way in driving or democratizing savings and driving financial inclusion. So this is from us just the first steps, and we are committed to doing a lot more to drive the financial inclusion in Uganda. And we think this is a core part of our duty and the reason for existence in Uganda.
Thank you very much, Mr. Amit, for that submission. If you just allow me go back quickly to Dr. Muhumuza. Doctor, in your submission, you believed that technology plays a big role in the adoption of saving, of people realizing this need. Given the submission from Mr. Amit of the ease that Super Saver brings, the technology in partnership with the bank, the technology, the reach, and the value driven by a strong bank like KCB, do you believe now we should start seeing this shift in the culture or the need as you described it?
Yeah, thank you, Andrew, and thank you, Amit, for that submission. I think there are two sides of this coin. The banks and the telco companies have done the part to remove those impediments in the past, that now people can post small monies, they can withdraw without any charges, and we need to see some of those hidden charges go away, because that takes us to the second side of the coin. Majority of the people who are saving are fearing that there might be some costs and charges implied in the systems. And so we need to see them come up. The gates have been opened up, but giving them the confidence, giving them the trust needs to be something to be addressed. The data from Joseph earlier on clearly showed people are saving under informal areas. VSLs, some of them even merry-go-round, they are not registered anywhere, but they have trust in each other. Now the point is, how do we move these people from these comfortable areas, because they're already saving, but outside the spaces where we can see them? Now quite often we conclude they are not saving, but actually they are saving their own money, they are borrowing out there. But how do we bring them into these more efficient, safer platforms? They have their own reasons, they have their phobias. Let's not forget, some of them have cheated each other. They have never dealt with banks, so they still have these phobias. So even as we invest more in the IT, the processes and the procedures, we now need to invest in the software, which is the human mind, their thinking, their thoughts. And I think that's where now the cultural aspect comes in. How can we build the culture of IT and the formal banks into their day-to-day ways of doing their things, that if somebody needs their money at midnight because they have a need, they can actually access it. Mobile money has shown us that that can work. Now, this partnership between the telcos and the banks should help us to bridge that, and we shouldn't wait for it to logically emerge, but we can invest in it to make sure the turnaround is faster than if it took a normal process. Thank you.
Okay. Thank you very much, Doctor. You have said the word trust about 4 times. So I believe, you must believe it's a very integral part of transforming the savings culture in Uganda. So I would like to quickly ask Mr. Edgar. The banks have been around for over 100 years, and over this time have built trust within our population. What would you say, how should customers trust innovations that are happening between the banks and the telcos, like you had mentioned, as a way of driving savings and other products?
Thank you, Andrew. And you're right, banks have been in the country for a while. The telcos are coming to about the 20-25-year mark. I think the first level of assurance that the banks bring is the fact that we are regulated, and moreover tightly regulated. So we must give credit to our regulators. And even where we have had challenges with certain banks, there are no depositors that have lost their money. I think it's something we have to really highlight. There are no people saying, I had money in this bank, I've never gotten it. Whatever challenges the bank gets, at the end of the day, depositors do access their funds. Now, so because of that, the whole banking principle is about largely trust and confidentiality. Those are the basic mantras of banking. And even when we partner with the telcos or any other player like a fintech, those are the key aspects that the banks bring. Apart from providing a return, it is also to ensure that depositors' funds are secure and can be accessed when they do need them. But I think the key thing here is that the banks do realize that we are now in a digital age. The digital is here and is here to stay. And it is to leverage off the technological infrastructure, the technological offerings, to lower our operating costs, drive our reach to the unbanked, like I mentioned, the youth, women, and the MSMEs that constitute close in terms of the MSMEs. I think they account for close to 60% or 70% of the operating funds in our economies. They are key drivers of our economies, and they are largely informal. So in that regard, the banks will continue to use technology to reach these, to make it more convenient, and therefore on the back end also to drive automation of many of their processes. Some of these processes do drive up operating expenses. So as we become leaner and more efficient, we believe some of these savings will be transferred to the customer, driving up returns, but they will also gradually, I think, help to drive what I would call the formalization of the economy, or the monetization of the bulk of the economy that still operates outside the formal structures. Again, I like what Mr. Kapoor said, the aspect of us making it fairly easy and simple. I think a lot of bank products were not that simple. Now they are. They are also very convenient. And what the banks will do is to ensure that they remain secure, and indeed people can get a return on it. In terms of innovation, like I've said, the key one will be obviously from a banking side is the digital offering, but the other one is also an investment in partnerships and platforms. The whole e-commerce that has been growing and has been accelerated by some of the lockdowns, the pandemic, has meant that the banks have to slowly invest in connection, integration with many of these platforms to support commerce, to support payments, and again also ultimately to support savings and also drive credit. I think for me that's where I look at it from a very broad helicopter view, that we will have to partner, we will have to ensure that the regulation remains robust, and we'll also have to invest a lot in education and obviously in the platforms that drive a lot of these digital transactions. Thank you, Andy.
Thank you very much, Edgar. You mentioned the word credit as part of your submission. And at this juncture, I think let us talk deeper about that. Let's talk about credit. And to Mr. Joseph, what do you believe is the role of technology in spreading credit or deepening credit within the SMEs space in Uganda, the small and medium-sized enterprises?
Savings, like I said, is only the starting point. It can never be enough to be able to finance the growth of a business. You always need credit to leverage the large pool of capital that external financial institutions like KCB have. And that's why it's very important that businesses not only get into a culture of saving, but also develop the skills and the muscles and the experience, capabilities to leverage credit to be able to meet their business aspirations. Unfortunately, in Uganda, most people are very wary of credit. And I will show you some interesting slides just to give my response, put my response into context.
Thank you.
Just a moment. If you can see, if you look at this part of the slide, whether it is male or female, less than 5 or thereabout do actually borrow money. And from my experience, one of the reasons why most people fear to borrow money is because they think that the banks are going to take away their assets. If it's a house, they're going to take over their house, because that's the experience most of them have had. And you can actually see from this slide, on the former side, all the figures in terms of people who do borrow across gender is less than 3%. Even mobile money is still less than 2%. The figure actually increases when you talk about savings groups. The figure increases when you talk about family and friends. So where does technology come in? Back to your question. You find that the main drivers of choice to borrow money are speed of access to money, convenience of access, and easiness of use. For a long time, that position has been held by family and friends. It has been held by the community groups. They are much easier to access. If you have to apply for a loan, it's easier to get it from your father, from your mother, from your friend. They won't ask you so many questions. They understand you, they trust you, they can bear with your risk. Now, the value of technology is that technology can be able to address some of these challenges that for a long time have bedeviled the banks. Speed of access, convenience, and easiness of use. What is interesting is that interest rates and repayment terms are not mentioned a lot, meaning that contrary to the most believed myth that people will not borrow because of high interest rates, people do actually manage risk. Their biggest challenge is, how can I easily access that money? And can you trust me? And I believe that technology can play a very big role in bridging that gap that the banks have always had in terms of ease of access, convenience. Yeah, so that's why I see technology playing a very big role.
Thank you very much, Joseph, for that very insightful submission. And my next question goes to Doctor. So, Dr. Muhumza, could you help me to define the current trends in digital financing? And do you believe digital financing will take over the traditional financing methods that exist? What is the likely impact on the economy? Joseph has already submitted that less than 5% currently are borrowing, and this is mainly from the formal sector. What is your take on these trends of digital financing?
Thank you, Andrew, and thank you, Joseph and panel, for really insightful conversations here. The reality that I see in the partnership that we talked about, so it's neither that the telecom companies will take over the traditional banking space, but the partnership has already evolved, where we have kind of fused the issues. Sitting on a bank board way back in time, 10 years ago, I literally started to champion the cause of IT. And good enough, the central bank also told us to really recruit IT personnel because banking had shifted from the traditional BCom training, BBA training. It was running on platforms. And so the people we needed were the IT. So I said I need to invest in the IT department. We need to do with those spaces. So it's the question of integration. How best do we see the integration of the technologies, very innovative and very effective technologies that we are seeing into the banking space? And that's where I would want the next set of policy and legal conversations go into, because like Joseph has highlighted, the bottom of the pyramid that we really want to bring on board are looking for speed of access. IT is giving us that. They're looking for convenience, ease and fit for purpose. These are not people who want to write a feasibility and so many things. They want you to trust them. I am a woman who sells food in a market and the food is eaten for lunch. But I need to borrow money in the morning to stock the meat, the nuts, bananas, and whatever else I need for that lunch. So ease of access and convenience is going to be very critical between 6 a.m. and 7 a.m. when I stock those items and begin my cooking. And I want to pay you in the evening because after 3 p.m., I've gotten my money, I can pay you back. Now, even if you had an interest there, where is the interest that is on a daily basis? And I think that's where Joseph is saying, to them, cost wouldn't be the problem because they're not going to hold on to that money for 1 year. They're not even going to hold it for a whole month. So if you're still quoting interest payment on a monthly basis, annual basis, you're not speaking to this population. So how do we retail those? Now, my concern, I think, as Joseph has raised, and something we referred to earlier, is the move of the central bank to say, all the telecom companies, please create for me different entities that will handle the financial sector business. It's a good thing to have the regulation in the same space. It's my prayer that we're not going to get into the regulation that now undermines the innovation, speed of access, and convenience that the telecos have been having. The due diligence being done on mobile money platforms is completely different from the regulation that we'll be having on the side of the central bank regulation, especially for borrowing. Know your customer, we have no problem. Everybody needs to know that customer. But as I've described the woman above, this woman, if she goes to a bank and then they begin to say, okay, where is your business history? She doesn't have it. But that does not mean she has not been in business for the last 2 or 3 years and has grown her business. How do we capture that to be sufficient enough to allow this woman to borrow? So the regulator, the central bank, needs to be very clear that even as we continue the integration, the innovation and those characteristics, speed of access, convenience, fitting the money to purpose should not be lost out and locked into some kind of inhibitive regulation. The telecom companies have done very well. They will lend and have trust on big data analysis and your history, which is available on the platform. And I think this is why the banks also need to pick and say, how can we do big data mining? Rather than asking this person to submit documentation, can we just look at their big data history? And this, I think, is the integration we are seeing with these products that Airtel and KCB can really integrate. And then we can have a conversation with the regulator. Should you find anything that is not business-like, but is regulatory impediment, we can have that conversation because I think we have very good ears and minds that are ready to adapt at the central bank as we speak.
Thank you very much, Doctor. And I like your analogy of the woman in the market. So I will then assume that your submission is that technology should take access to credit to those kinds of levels of the woman who is running a daily business in a market. So this then begs a question to Mr. Amit Kapoor, because we have seen several innovations coming out of Airtel Uganda in the recent past. These have included the agent float financing that is on focus today, MasterCard product and many others. How does Airtel hope to promote business transformation? For example, how are you going to relate with that woman in the market that needs daily credit to run her small business? How does Airtel hope to promote business transformation through digital financing? And should small and medium enterprises and the lady in the market prepare for a new era in lending?
Okay, thank you, Andrew. And I'll start by saying that, you see, access to credit to unlock your capital, and therefore the ability to earn more than the interest to build on your own basic capital is one of the biggest unlocks that you can do for somebody wanting to improve their financial situation. Be it an enterprise, and almost all the successful enterprises or businesses that you will see around you have built themselves on some form of a credit facility, either today or early in their startup stage. However, that credit facility in Uganda today seems to be largely driven by informal, as per the statistics shared by Joseph, which we just saw. Now, access to making it formal, which one reduces the risk of fraud on an individual, reduces in a way the charges and makes it a very transparent process, can transform lives. It has the potential to transform lives, whether be it an individual or whether be it a small and medium enterprise. Now, if you look at it from a point of view of the person who needs this money, what are they looking for? They're looking for access to these products, transparency in these products, and they're looking at low charges for them. But if you look at it from a point of view of lender, what is a lender looking at? Again, they need an access to reach out to these customers, but at the same time, they also need trust and security and assurance of repayment from the person to whom they have lent, whether it's a person or whether it's an enterprise. Now, this is where the technology and the ability of somebody like Airtel comes into play. We have the ability to bring both these disparate sets together. On one hand, we bring a lender like KCB, and on the other hand, we bring in a large data set for customers, which is running into millions. Today, we have over 13 million subscribers at a 90-day basis all over Uganda. Now, as you come in, we become the bridge to bring both of them together. A lender on one side and a subscriber or an enterprise who needs this money on the other hand. And using our data, and you can do a data mining to agree and check and balances and ensure that you are able to restrict your lending to the right set of people with a high chance of repayments. As well as you can let a customer know that you can access the amount that they need up to a certain limit. And this is where, one of the most innovative products, that one of the biggest products that we are very excited about is our agent loans. As we mentioned earlier, we are for the unbanked. We are the bank for the unbanked, which means you keep going deeper and deeper into the country to reach out to the customers. And as you reach over there, today we have over 1,300 Airtel Money branches across. And we have over 100,000 agents. And as you find these agents into deeper and deeper and rural and more rural places, and when you speak to them, you actually realize there's a set of very real, good, genuine, hardworking people around over there who have their first experience of business with Airtel and who really want to grow. They do want to make that extra buck, and they do want to do that extra work to be able to generate that. But what is constraining them is the capital. How much float they can put on their money to be able to serve their customers. And that is where this agent loans come across for us. Because what we are doing is we're enabling these people to get that additional capital, short-term capital, at phenomenally low charges with a very secure and stable bank like KCB, and with the security and convenience of Airtel Money and their ability to rotate that capital to earn that extra money that goes a long way towards their earning, towards their savings, and towards their. And then similarly, we have MasterCard tie-ups, and then we have other tie-ups to bring this. And very soon, we will also be bringing these phenomenal products, not only to agents, but also to our subscribers. And there are 3 or 4 tie-ups, including a very good tie-up with KCB that we are going into for.
Okay. Thank you very much, Mr. Amit. And you mentioned the word transparency in your submission. And I also noticed that both Dr. Muhumza and Joseph mentioned that cost is not really the barrier, but the main issues are trust and convenience. So this then begs my question to Mr. Edgar Biama. As a seasoned banker, I would like to know your understanding. Would you say, how are the financial institutions preparing for digital financing and all the accompanying innovation? And what is the role of the financial institution, especially as far as risk is concerned? What are the risks to the customer now that we know that cost is not really the biggest barrier, but trust, convenience, and transparency?
Thank you, Andrew. I think as financial institutions, the focus today has been on a simplification of our products, especially to touch, to get into the bottom of the pyramid segment, which is the largest segment of our economy. Previously, banking was a fairly elitist service or industry. That has changed a lot. I was, and the doctor did mention that the investment in technology, for instance, slowly started removing the aspect of opening and closing hours, which banks were premised on. It also meant that you were basically a 24/7 outfit. It also ensured that some of the issues we're having with access start disappearing. Now, the tie-ups with the MNOs, for instance, mean that we can access, also they reduce our reliance on brick and mortar, which in the past was a major form of distribution, and then transfer it into the digital space. That also means it's fairly cheaper, obviously. I don't need a guard, I don't need an AC, I don't need a generator, to ensure that I'm providing a service to you. But it also then means that in order for me to reach our customers and the broader public, I have to make it fairly simpler and straightforward in what, or for that matter, transparent on the charges we are having. So the banks have made that effort and continue to do that. I think you will see quite a bit of even apart from partnerships, even shared infrastructure investments across the banking sector to try and drive this reach and reduce the cost. And I think where I speak, every business, banking inclusive, has to understand that our customers and our economy is slowly turning into a digital economy. The key focus, even from a regulatory point of view, is to drive a cashless economy. So both government and then our regulator and then ourselves as players and the broader populace have to slowly start focusing on how do we become digital natives. And this brings me to the second part of your question, the risks involved. Essentially, the aspects to do with money have always had risks. It's nothing new. The issue is that the form of the risks have changed with the mode of delivery or operations. The biggest risk now today is cyber risk. And of course, way back you cared about how, whether your signature could be forged, whether somebody could steal a signed checkbook and withdraw money on your account. Today, the worry is on passwords, it is on personal identification numbers, it is on the wrong phone that the wrong details that are used. So in terms of obtaining, say, one-time passwords, all these mean that our people have to be more vigilant. The speed of transactability on the digital platforms is literally instantaneous. So whereas you could have made a mistake or detected a potential fraud and then rushed to a bank to prevent, and sometimes even succeeded, sometimes in this case, it is fairly instant, and if you are not vigilant, it's done and dusted in a couple of seconds or maximum minutes. So the aspect of data privacy becomes very, very important. And that's where both the telcos, where the financial institutions, and then government and the regulators come in to make the kind of rules that ensure that players like us have the right kind of standards that create safeguards, and that also there is oversight on the entire digital eco infrastructure. So the biggest risk I see continues to be cyber. It will keep growing. But then again, there will also be other aspects that keep cropping up. There are issues that, for instance, in terms of the digital space, are fairly emergent at the moment, but will become critical from a regulatory perspective, things like cryptocurrency. Many of them have positives, but they also have their negatives. How do we deal with that in an economy where in an economy and a world that is changing every day, that is changing so fast, and yet when you look at the demographics, the bulk of our population will probably be moving faster than the regulators and many of the players, as the regulator and many of the players strive to catch up, and of course the evolving nature of the structure of the economy. So to me, where we see is that the continued partnerships will be required across the MNOs, across the fintechs, and all other players together with government and the regulators to ensure that, one, we don't inhibit innovation, but at the same time, we provide the transparency and the security and therefore trust that the users of these platforms will require of us. Thank you.
So, in Mr. Amit's submission, it was evident that Airtel is committed to going deeper and deeper, these were his words, to the last person and giving them access to credit. So very quickly, Dr. Muhumuza, how do you believe this will transform our economy if more and more people at the lowest level, including the lady in the market, can access credit digitally?
Thank you, Andrew. Of course, money is a major transformer of economies. It is the blood of the economy. It's what makes things move around. It's what actualizes people's ideas and business plans. Without credit, you cannot move the economy to the next level. And the Bureau of Statistics household survey that came out last month or early this month, or last month rather, I had forgotten his first. It's very instructive and very informative to know that 81% of the family household enterprises, 81% of them say they were using their own savings or retained earnings. Only 0.4% were borrowing from commercial banks, as we know them. Now, we know the traditional function of commercial banks is intermediation, to pick money from those with surplus to those with deficit. And ones with the deficit are the investors. Now, here we are in an economy where the very channel that is supposed to move money from those with surplus to those who need it is not working for some reason. Not that the banks are not there, not that the technology has not come up, but for some reason, something is holding this flow of money and in the process, constraining the growth of the economy. Because that woman in the market must access that money to do what she does best. That other person who sells second-hand clothes, they usually stock, the moment they hear the individual is going to be cut, they want to be there. So they need money at that point in time. And in a week, they will have paid back because this individual is cut possibly twice a week or possibly weekly. So whatever it is, how do we get money to these people and shift them from the limitations of their own savings and retained profits, which we already say are not there because their incomes are very low. So it's going to be a very, very fundamental thing for us to make sure that this connection actually happens. And I think I see two areas as I conclude that we may want to speak to. The cyber security issue is very, very critical. A lot of these people have been robbed of their mobile money. Some of them at what you would call the equivalent of gunpoint. Somebody kidnaps them and says, give me your PIN number now. And they leave him held up somewhere. They go to a mobile money agent, withdraw all the money and go out with it. Now, this may go away with time. We need to keep sending these messages to people. Keep your money safe. Do not share your PIN code with anybody. Do not disclose it. How do we emphasize that culture? It's going to take some time, but we can also put in additional measures to say you can set the limit on how much money can be withdrawn from your own system. So if I have my 500,000 and somebody takes my PIN, my system is set that at any one time T, even if it was me, I can only access 80,000 and then access another 80 after 2 hours. Certainly there, even if somebody had kidnapped me, he's not going to wait for another 2 hours to draw the next 80,000. So we can educate people to put in some of these measures for themselves. And even if the person who has kidnapped you pushes you to change your system, we can say you can change this system, but when you submit it to Airtel, it will become effective after 10 hours. You are trying to put a gap between me being held at ransom and all my money being drawn out at the same time. We can creatively keep thinking. I like the IT, they are in an innovative space, and when they blend with the bankers, we can address, because the main message we want to leave with here, people need the money, the banks have the money, the telcos have brought up the technology, but trust and fear seems to still be holding people out there. How do we flood this space with information? Information people can trust, that as they come out to borrow, the money lenders' experiences are left out there, because many of them are even fearing the banks because they have had an experience with the money lender. And the money lender was not even a money lender, it was a fraudster targeting their asset, and he took it away. But for them, they will think everybody who lends is like that person I felt the other week or the other year. So how do we deal with this? Build trust, flood this with information, but also bring in more technological ideas that can really help people pick the confidence against cyber crime. Thank you.
Thank you. Thank you very much, Dr. Muhumza. I would like again to thank the members of our audience. Thank you for staying with us this far. And to remind you that please subscribe to the Airtel YouTube channel so that you can see the rest of the series of these webinars that will run till the end of 2021, and so that you can also be notified of any new and exciting content and events at Airtel Uganda. So I would like us to share our closing remarks, and I will ask each of our panelists very briefly to share closing remarks and the takeaways that they would like our audience to go with. For Joseph, I would like to also in the same breath just ask you to make a comment in response to a question directly to you from the audience, which is, how do we encourage people at the grassroots to save? So we will start with Joseph to respond to that and give us a closing remark.
How do you encourage people at the grassroots to save? It's really a mindset. It's really a mindset, and it will take a lot of financial literacy at different levels. Even talking about technology, what the doctor has not talked about is that most people even fear technology, because remember, technology only interacting with a gadget. People are used to interacting with flesh and blood, and responding back to me. Now I'm dealing with a gadget that doesn't respond. If I go to an ATM and I put in money, or I'm trying to withdraw money and maybe my card is trapped, I'm done. The ATM will only tell me you cannot access your card. Whereas if I was in a bank, I would argue with the relationship manager and say, but why are you taking my card? So there's a lot of uncertainty around technology that we need to be able to teach our people how to interact with technology and to become accustomed to technology. So a lot of education has to happen, not only at the company level, Airtel, KCB, but also within the community, so that people get used to dealing with gadgets and engaging in transactions without flesh and blood. Our colleagues in developed markets, they're more or less there. They can really interact with their gadgets without even flesh and blood. Which brings me to my closing remarks. We can have technology, But technology is only an enabler. It's not really the end in itself. The most critical thing is we need to understand our customers. We need to develop customer-centric products. I like the example of the woman, of the vendor, the food vendor in the market that Dr. Muhumza talked about. You'll find that most of our products are designed with a salary earner in mind. That's why they're around annual interest rate. The interest rate is annualized. They're around monthly payments. Yeah? Whereas the customer you're targeting is not looking at months, is not looking at years, is looking at hours in a day. So do you design a product that is speaking to months? The man has never earned a monthly income. He's never thought about how much he would earn in a year. He only knows what he earns in hours. So meaning that when you're designing a product, it needs to speak to the reality of that customer. So that's really my closing part or short to this discussion, that we need to understand the customer and design products and services that speak to their lives, their aspirations, and their goals.
Thank you. Thank you very much, Joseph, for those remarks. I will now call on Dr. Muhumza. Please give us your closing remarks.
My closing remark is really the economic system. If we cannot finance the bottom of the pyramid is going to collapse. I know quite often in the financial service sector, quite often we are looking, some banks are even literally defined as corporate. They deal with only the big borrowers. They deal with the big boys in the club. Now we have all seen that the big boys in the club who have built arcades cannot pay. So I like these kinds of conversations for banks that have really a KCB focused on how do we go further down to beef up this system. But that is where the economy begins. That's household, that individual person, if they are not strong in the system, then the whole system will come collapsing down. So the economy is linked with the financial sector, and the financial sector is very, very critical. As I said, it's the blood system to make sure the blood that originates from the heart gets even to the toes, gets to those fingers, gets to every part of this system. How do we creatively do that is a conversation we are going to continue with, and the partnership between the banking sector and the telecom companies is a very, very welcome gesture. Let's go down to the bottom of the pyramid and see how we can make the action happen there. It's not going to be a trickle down, it's actually going to be a trickle up. And until we do that, the economy is going to continue having problems. So I'm very happy to be part of this. And going forward, we definitely will continue the conversation. Thank you.
Okay, thank you very much, Doctor. I would then like to invite Mr. Edgar Biama to give us his closing remarks. But as you close, Edgar, please respond to a question from Paul Murungi from the Daily Monitor, who asks, how are the banks and the telecoms going to ensure the cost of transactions is kept minimal to encourage access to savings and credit? Thank you, Edgar.
Thank you, Andrew. Obviously, cost is a very critical component of this, but the current focus, really speaking to Mr. Murungi's question, is these are micro savings. So the aspect of cost becomes paramount, largely because you're chipping away at a very small bit or bite. So in the case of at least our current product with Airtel, the Airtel Super Save, minimum is 500 shillings. There is no charge for withdrawal. There is no charge for depositing. So already you can see, and that's the transparency we bring, that you put in 500, the least you can take out is going to be maybe 501, because you would have earned interest on a daily basis. And that will be largely the focus, because we now have to understand, like Doctor was saying, like Joseph was saying, that we need to understand this customer, particularly at the bottom of the pyramid. And this, for me, will speak into my closing remarks, that the banks, as a mixture of competition and technology and evolving times like the pandemic now, have forced or have ensured that the bank is going to the customer rather than the customer coming to the bank. And that means we have to invest in a lot of our in technology, in data. Most importantly, we have a lot of data that we have not been utilizing, largely to understand our customers. So it's not the conventional know your customer, it is actually understand and then speak to the products that are convenient, a focus on simplifying the product, making it very straightforward to the customer, making our processes very straightforward so that it's not a very cumbersome form filling exercise. But also that is also time saving, drive reach and relevance, a very critical aspect. The issues that both Doctor was referring to and also Andrew in his slides, but Doctor from the UBOS survey, speak also to limited reach from the banking sector especially, and also how do we then get all these people who are relying on savings, family and friends and VSLs to get into the formal economy. That then would also help us to play our role as financial intermediation, but also the transmission of monetary policy by the central bank. And therefore, I think I will conclude by saying that the banks have embraced and will continue embracing technology because the customer is probably increasingly more tech savvy than us, and we just have to continue investing in these digital shifts in our economic superstructure without losing focus, without losing sight of our traditional role of financial intermediation, and obviously built around our key mantra of trust and confidentiality. Thank you. Thank you.
Thank you. Thank you very much, Edgar, for those closing remarks. So I would also call upon Mr. Amit Kapoor to share with us your closing remarks.
Thank you, Andrew. I think all my panelists have stressed driving financial inclusion, driving savings, and driving loans, and access to capital to people at the bottom of the pyramid is like the lifeline to grow the economy. I think the word that he used is it's not going to be top down, it is going to be bottom up. As you start building the economy and you start expanding the economy, it is like the bloodline for the economy. And I think when you're doing that, you have to keep in mind the understandings and the requirements of those particular customers. As the example given of saying that why are we looking at a month, we have to look at the earnings in an hour, give them the flexibility of pay them in the hour that they earn, pay them in the day that they earn. And those are the kind of things and those are the kind of innovations that we have to keep in mind as we build this entire thing and start driving financial inclusion. So as long as we come together, complement our strengths, do a lot of data analysis to reach the right set of people, and keep their basic requirements in mind, keep the product simpler, keep the products tailor-made to their earning potential or their daily behavior, and keep them convenient, easy to reach, and accessibility. I think there's a lot of potential to go ahead and drive. And when you do that, we help people transform their lives and in the process, transform the entire economy. So it's a very exciting space to be in. And I think we can only say we are fortunate to have been a part of this. And I think we will continue to drive and go forward on this journey.
Thank you. Thank you very much, Mr. Amit. I am already excited myself, seeing that this space will grow and be exciting for all of us Ugandans as a whole. So at this juncture, I would really like to appreciate and thank deeply our panelists for sharing not only your time, but your knowledge and experience with us, and also to thank our viewers and all our attendees for sharing this time with us. We hope that this has been very informative, very educational, and exciting at the same time. We will continue to have many more of these series throughout the year till the end of 2021. And we encourage you to subscribe to the Airtel YouTube channel so that you do not miss any of the series or any new updates and events. All questions that have been posted on the chat will be responded to. And at this juncture, I would like to thank everybody for coming, and from all of us, have a very nice day. Thank you very much.
Thank you, Andrew, for hosting this exciting webinar. All the very best.
Thank you, Andrew, and thank you, fellow panelists and our participants.
Thank you.
Thank you all.
Thank you, gentlemen.